more than 200 billion US dollars from the entire crypto market was wiped out on Friday. Bitcoin and other currencies plunged as a proposed capital tax hike from US President Biden led to a wave of selling. This is the IG Trading Talk and I'm Manuel Koch. And joining me now are Salah-Eddine Bouhmidi, he's the head of markets at IG, and the legendary Einstein of Wall Street, Peter Tuchman, over 35 years on the floor of the New York Stock Exchange. So good to see you guys.
Great to be here.
Hi guys.
Peter, like a week or two ago, we saw the Coinbase IPO and many people said Wall Street will change now. And now we see the losses. Do you think this will be a good change in the future, or is it just like a high risk if Wall Street really changes into the crypto world?
You know what? Look, this story is an ever-evolving story. I am fascinated by it. As you know, guys, we talked for almost a year before I would even let you ask me questions about Bitcoin, but it became the what we call the fruit du moment in French, the fruit of the moment. It's obviously something that's in everybody's wheelhouse, so we need to address it. Then we started to chat about it a little more, and I didn't really understand it, but I found the significance of the powers that be within the financial space, within all kinds of industries, that they were talking about it, whether PayPal or Elon Musk or this or that or anything. And then we also talked about the fact it's a supply and demand. The Bitcoin story is basically a supply and demand story. Right, there's only a certain amount of them minted, and then once you create a demand for them with a limited supply, you're going to have a market that goes higher. Now, over the last month or so, we've seen people drifting into this Dogecoin, which is an Elon Musk story. I believe there's nothing more than a bunch of hype on that end. Yes, we're going to see. I don't believe that Bitcoin is yet by any means mainstream. Right? I mean, I think the powers that be, whether it's that Guy Pomp or the Winklevoss twins or the Elon Musks of the world, they would love it to be mainstream. They've done everything in their effort from a marketing point of view to try and make it mainstream. Talking about that you can buy a Tesla with a Bitcoin, that you can use it in transferring of money, that all these other things where it's going to be used as a digital currency of the future. I think that was a marketing attempt at making it as mainstream as possible. However, look, we saw Coinbase come to market. We were a little disappointed as the ambassador of the floor of the New York Stock Exchange that we did not get the listing, because we are firm believers that the price discovery process on the floor of the New York Stock Exchange, being really the only one where the price discovery is done by humans meeting technology in the handheld computer, we were a little disappointed that we didn't get to see it. And in our opinion, in retrospect, the way Coinbase has acted is a reflection of why we think we have a better process of opening up markets on the New York Exchange rather than NASDAQ. On NASDAQ, as people may or may not know, this is strictly a technology game, right? People put in their buy orders. People put in their sell orders. There's really not a lot of transparency. People get a range on where the stock's going to open, but the price action after the IPO opens is actually a questionable one, because we don't know where the bodies are buried. Right? This is something I take very close to heart, because one of the things that we play on the floor, me and my son Benny and a lot of the people we do business for, is the price discovery, whether it's in SPACs, whether it's in IPOs, whether it's in direct listings. The price discovery process, when we open a new stock on the floor of the stock exchanges, where do the bids and the offers pair off, and where are the bodies buried? In a way, what I'm saying is, where is their support? Where is their resistance? We're building a building here. You can't build a building by throwing a brick up there, a brick up there. You need to build a foundation so that the initial way that a new IPO is opened, finding out where do people, the public It's an initial public offering. We're taking a private company, asking the public with their best effort, where do you feel there's value? You may not be a buyer on the opening. You may be a buyer at 290 or 280, depending on whatever homework you've done. So Coinbase opened quite a bit frothy at 381. It ran up to 422, I believe, on just irrational enthusiasm. And now it's inched its way back perhaps below $300. That is a problem in many ways. It will find its traction on NASDAQ. I wish we had gotten the deal because there would have been more humans involved. We would have been able to build this building, I believe, a better widget than the NASDAQ was able to do. But we're seeing that the more public attention that the Bitcoin and digital currency space gets, the more they are at risk when things like President Biden's talk about capital gains comes out. When you're trading a risky asset and that risky asset starts to get traction within the mainstream, well, they're going to be the subject of attention when the rug gets pulled out from under the market. And that's what I believe happened when Mr. Biden decided to start chatting about a 43, the wording, they started floating the idea of a 43% capital gains tax. Well, if that's going to be the case, everybody who makes $1 million or more, and there are a lot of new millionaires out there, and there are a lot of people within the financial investment community who do make $1 million or more, that when they make money, they're going to have to pay the piper. And if that's the case, we're going to see the rug get pulled out from the assets that they've bought. Perhaps Bitcoin, perhaps Coinbase, perhaps any number of things that are on the riskier side. Those things are going to get focused when the rug gets pulled out from under them. And I think that's what we're seeing right now.
Yeah, Peter, let's talk about our favorite topic, technical analysis. If we look back to the last week, we had the people who sticked actually to technical analysis have been the successful guys. I mean, we can talk about gold, the double bottom. We can talk about the trading range or support level that we lose in Dow Jones. But especially for crypto traders, I was talking about the rising wedge in Bitcoin, which is a bearish pattern, of course. We broke down and we have reached my first target, which was almost 45,000 K. We are now actually continuing this trend continuation pattern. I think that we could go forward with this pattern and maybe see a really key support, which is 40K. I don't want to talk deeply now about technical analysis in crypto, in Bitcoin especially. I just want to ask you, there's no other opportunity for me as working with technical analysis in cryptos. And if a trend, the bearish trend started now, do you think that it can lay more than weeks, or do you think this is just a small dip which would be buyed on because there's so many attraction on cryptos?
So it is a very good question. What we're seeing right now is, which really enforces the technical analysis question, is, and it kind of speeds up the process, is we were on a Q&A last night with David Green, one of our friends and partners on technical analysis, and he said that these movements are so fast and furious. I asked him the other day when the President Biden had announced the capital gains tax, the idea of doing it, and how the market reacted. Was there any support in the market? And he basically said we were trading around 416 in the SPY, and the SPY got down to about 411.80, I think, and there really wasn't any kind of support until 411.18, actually. And we've seen it in the GameStops of the world. We've seen it in these stocks where there's been a new bit of attention on it, a lot of new players in the game. And what ends up happening, as we're seeing the reaction on the upside, when the mob shows up to buy the meme stocks, well, the mob is going to show up on the sell side as well. Whether it's a Bitcoin, whether it's a meme stock, whether it's your airline companies, or whether it's the SPY in general. What ends up happening in a market like this is that we reach our technical levels quite quickly because the volatility is still here and it's quite quite accelerated. It's quite, what's the word? It's quite emphasized, right? So when we do have moves, as we've seen on the upside, and now we've seen once again, due to the capital gains announcement, it's not etched in stone. It hasn't been voted on. But the initial reaction was one that was fast and furious, so that the levels that we are taken to quite quickly on the upside and downside, where we are possibly going to hit technical analysis levels, as you will see in your Bumidi bands with the wedge concept, or in just technical analysis, trend trades and far from moving trades, is wherever we're going to go, we get there kind of quickly when the market is responding to news. We are now seeing a trend where this market has stopped just going up, right? We saw that, and as you and I, the three of us, have spoken a couple times a month since March of 23, it's been basically a fairly simple boat that if it was a stock that was friendly to the pandemic, one that was making our lives easier within the shelter in place concept, you could buy them, you could put them away, and that you would become profitable. Our hope is, as technical analysts and educators in some way, we hope that people will take profits when they have them and not turn a winning trade into a losing trade. However, what we're seeing now over the last month is the market did a little bit of a rotation out of some sectors into another. As the virus volatility and vaccine story unwinds, we're seeing a bit of a rotation into some stocks that are more within the reopening space, that we will be more friendly as the world starts to reopen. I know Europe is not as much as here, but we're starting to see a little bit of that. And money is going to start rotating around. And then we saw a bit of focus go into the digital marketing space, the digital currency space, and our attention got taken off the Dow and the S&P as we entered the Coinbase story and whatnot. But what we're seeing is that markets don't just go up. They also go sideways and they go down. And when they go down, when you've got a market that has so many new players in it and so many people in the market now who don't have the fundamentals of technical analysis, meaning that they're not sure once they get into a trade how to get out of it responsibly, right? Because as we know with David's course, it's very easy to get into a trade, but it's very hard to get out of a trade in a responsible fashion, whether it's a winner or a loser. And what we're seeing is just hitting the sell button irresponsibly or averaging into a trade that's going against you is not a responsible way to do the business, right? So what we're seeing is markets don't just go up, they go sideways and they go down. And when they go down, there are big vacuums. There are big gaps where we don't see support until we get to support levels. As you've described it last week, at $66,000, nobody was ever thinking Bitcoin would ever break 45,000 and approach what you say is a support level. You're crazy. It's never going down there. There's too much support. Well, wrong once again. When things are trading within these vacuums, stocks will go until they hit support, right? Because there are technical analysts out there who are going to sell them and take profits until they get to a point where it's time to buy again. We've seen it in the meme stocks. We saw GameStop go from 30 to 480, back to 150, back to 280. And the gaps on the upside when the sentiment was not bullish, but bearish, was a 200-300 point vacuum where people who don't have the education and technical analysis are going, well, people were buying it at 350. We've got to give it a shot at 250. Well, that would have been a mistake. We've got to give it a shot at 150. Once again, that was a mistake. We don't see the support until $71. So once again, the carousel comes back to the golden ring, the golden ticket, which is you need to be patient in a market that's been very frothy on the upside to know where the support lies, and it all lies in technical analysis.
Absolutely. Don't be greedy. Be technical.
We should make a T-shirt like that. Don't be greedy.
We can sell our own T-shirts. Peter, another important topic, President Biden signaled a change for American climate politics. And also here in Germany, probably we will have a green government after the September election. Do you think that green investments are an important and big trend for the future?
You know what? I think they have to be. I think it's definitely a problem that needs to be addressed. We have been deniers of it for a very long time, and there are still people who don't believe it's a reality. And to be perfectly honest, you know, I live in a household of young ladies who are firm believers in climate change and global warming. And any work that I've done in a responsible fashion has proved to me that it is the problem of the future. That it's very imminent, right? We always talk about when things are imminent in English, that means that the SIHT is about to hit the fan. And the bottom line is that this is a fact that's going to come to, you know, our children's children are going to be confronted by the reality of what fossil fuels have done, what global warming has done, what the green future looks like. And whether now, after a number of years of having climate deniers in the White House, I think we do have one. Whether it's going to take a while for this trend to become mainstream once again, as it took a while with the Bitcoin story, I think it's going to take a minute to catch on. But I think it's actually got more traction than the Bitcoin story in so many ways because of the reality of it. Bitcoin will come and go. Maybe it is the future of financial transactions in the digital space. But the bottom line is that fossil fuels and the green economies of the future are really a matter of life and death for our ecosystem. And if we don't address it, we will have a problem.
Yeah, we talked about technical analysis in the first question. Second is seasonal, because, you know, this combination quantitatively is my approach. And we are reaching May, and we know one of the most important, famous sentences, selling May. And remember to come back in the late October, September. People are discussing and which date, which entry would be the best. But anyway, seasonal patterns are coming back this year, even last year, and we see we are on highs. What do you think? Is sell in May go away? Does it play out this year, or do you think, hey guy, we are in a trend that is unstoppable? We have just one direction, and it's north.
So look, I was actually looking at the S&P 500 on these days where we've seen news. Look, we lived for 4 years within the Trump administration where a 500, 600, 700 point move in the SPY on an intraday basis was a common thing, whether it was tariffs, whether it was our arguments with the Russians or the Ukraine story, whether it was political or global, economically global stories or whatnot. We're seeing them once again within the President Biden presidency, because he's quite forthcoming in his opinions. And while some people don't agree with him, I think it's definitely a time for some changes. But when I see the markets, there's very little as a market, for what I call myself as a forensic analyst, when I like to listen to everyone's opinion. But at the end of the day, I love to see the price action. David always talks about it. We're in a new rule mode. 2020 and 2021, which means that we've really never seen where we came from. We've never seen where we're going. The reality we're living as being in the midst of a pandemic and looking to come out of a pandemic, there is no playbook for it at all. But we are clear that at some point, not sure what the time frame is, we will be coming out of this, and that it will take a while for the economies to get themselves back on their feet. But there is this irrational enthusiasm. There are a new generation of people invested in the market, and I kind of think it's in the millions, right? That every time we've seen a sell-off, whether it's a matter of the capital gains story, whether it's a matter of Mr. Biden raising taxes, whatever it's been, and trust me, since he's taken office, we have not seen much of a sell side come in here at all. We've seen a couple of stray days, right? We've seen a little bit of a rotation out of the tech sector and into some other stocks, but the market has marched on to victory here, right? It's been that way since January. I know that there are people who predicted that the minute we have Mr. Biden as the president, the market was going to crash. I believe it was our last administration that said that. You guys don't know, if you don't re-elect me, this market's going down thousands of points. Well, once again, he was wrong. However, what I'm seeing is, if I analyze the market on these few days that we've seen negative reactions to the market, this capital gains story being one of them, and or a number of other tax stories and whatnot, that any sell-off we've seen, and this goes back, you are a master of historic technicals on seasonal patterns, that, since the beginning of time, every huge sell story has been rebuffed by an even larger buy story. The crash of 87, if you looked at it as a buying opportunity, not a crash, was an amazing, pivotal buying opportunity. The financial crisis of 07, 08 was, in fact, if you were not a seller at that point and you were a buyer, it took a lot longer to get back to even, but it was once again a generational buying opportunity. And once again, we've seen it in March of 2020, that sell-off that we saw just about a year ago due to the pandemic was in fact a generational buying opportunity. And we're seeing it on a bit of a more of a microcosm, is that these short-term sell-offs, and the capital gains one was quite fast and furious. I think we need to be clear that the market's reaction to Mr. Biden's statement was very premature. It hasn't gone to a vote yet. It was just a statement, right? The market was trading at record highs when it came out. And to be perfectly honest, it was a 300 or 400 point sell-off. That is really a blip in the ocean, in the market of where we are. Well, we've seen the market rebound quite well after that announcement, after the initial reaction. So I think the appetite for markets are extraordinary, and I think they're unprecedented. The bottom line is that the market has been strong in the eyes of a complete economic global shutdown. Once we get our teeth into a little bit of what the future may bring, where we'll be able to see each other again, we'll be able to be on stage somewhere in Berlin telling our story and having some fun. We'll travel, we'll take a cruise ship together, go to the movies, go out to dinner. Once we start seeing that on the horizon as a reality, I really believe we've got greener days ahead.
Peter, let's do all of this as soon as possible. I really would like that.
It's a deal.
Nice.
It's a deal. Guys, thank you so much for this time, for this show. Peter Tuchman, the Einstein of Wall Street from New York, and Salah Eddine Bouhmidi. I wanted to say the legendary Salah Bouhmidi, but yeah, let's say that.
He is
legendary Salah
Now.
Eddine Bouhmidi from Cologne. Guys, thank you so much.
Thank you, guys.
And thank you for watching. This was the IG Trading Talk for this week. More information on IG.com. All the best. Take care.